here. This is going to be a video discussing how I utilize the FootPrint to look for reversals and things like that. So just a little explanation before I get into the video though is the first part of this is gonna be me explaining certain principles of the FootPrint that I've learned from others. So that's going to be the first part of this video, just a quick explanation of the principles. And then the second part of the video is going to be me explaining what I look for and some examples. Real quick though, before I get into it, if you're not following me on Twitter, make sure you're doing so. A link for this will be down below. I also created a free newsletter where I post every now and then, so feel free to go ahead and subscribe to that. I also created an in-depth course on the depth of market, FootPrint, market profile, how I prepare, journaling, all that cool stuff. So if you're interested, it's a one-time fee. You click that down below. I share my daily plans there and other cool things. Also, if you're interested in purchasing Jigsaw Trader funding, you can use code YUSEF for $30 off. And finally, if you're looking to use an online prop firm, I highly recommend using Apex Trader Funding. You can use the code down below to get whatever the best discount that's going on over there. So now that this is out of the way, let's go ahead and talk about the different principles. And yeah. So what is it? We're looking to see if we can spot some imbalances that are informing us that there's going to be reversals at certain prices. Once again, I can't emphasize how important it is to pair it with other tools such as VWAP, market profile, and the depth of market. Market profile can kind of give us, let me explain this a little more, but market profile can give us an idea where we're trading in terms of the larger picture. VWAP, depending on the order that you watch this, but I use VWAP to tell if something is overbought or oversold. If you don't know what I'm talking about, you'll see it in the VWAP and footy section. And the DOM, it's to see the way the price ladder is moving, and just see the way we're bidding or offering prices. So now some principles / rules that I have to look for for reversals include these. So one of the main things is delta flips. So I'll go ahead before I go into the examples, discuss. We have our calculated values. We'll pretend that this is the cumulative delta bar only. We'll just go like this. Let's just say that we have 500, 600 for the cumulative. We'll pretend that these are 5-minute increments, 700, and then all of a sudden, if this is like the cumulative delta becomes negative 1100, this is a delta flip. So when delta either goes from positive to negative or vice versa, delta goes from negative to positive. That's what I mean when I say delta flips. That's one of the principles that I have to look for reversals. Next up is an increase in volume with little to no range expansion. So what I mean by this is we'll pretend that this is our volume for our calculated values. We are increasing, let's just say we'll go like this. Tight range. Sorry, these are not even at all, but 7,000 volume done here. 8,000. 9,000, and then 11,000. We're doing a lot. We'll just pretend that this is like the NASDAQ, or we'll pretend that this is crude oil. All this volume being done here, but we're just overlapping and seeing no range expansion. You can see what I mean by range expansion is look at the next candle. It didn't even take out the previous low or the previous high. The next candle took it out, but then look at the next candle. It closed right here, and it opened right here, closed right here. So there's no breakout. There's no range expansion. Buyers and sellers, or buyers in this example, are failing to take us higher. Next up is buyers getting trapped at highs and sellers getting trapped at lows, or lack of interest at highs/lows or at areas of interest. So when I say that, we have our footprint. Let's just say that we see large aggressive 500 to sell here. We'll pretend that this is like a delta, whatever, a delta footprint, but negative 500 here. But you can see how in the next candle, doesn't even break the low, and we, start to go up. Now this person that sold 500 is going to have to cover, and they're going to, cause a move up. And then the second part is this idea of lack of interest, or also known as exhaustion. So when I say exhaustion, it simply means, let me see if I have an example here. It's a little tougher because these are sent to 3 ticks, but maybe on the S&P I'll grab an example and include it and see if there's exhaustion. But you can see how at the top right here, exhaustion simply is 2 bars right here. There's a 0, 0 here, X, 12, well, whatever. Oops. Let me make these a little bigger. These are displaying ticks. We'll pretend that these are 1 ticks. So 0x15 and 0x30. This double 0 at the highs implies exhaustion. And then if we were to flip it at the lows, $50 x0, 20 x0, exhaustion at the lows. So that's what I mean by that. Next up is large volume flip with buyers taking us back into range. So I keep on saying how I think of the market as the footprint as mini market profiles. So if we have these bars that are overlapping, and we see a little break below. Oops, where is this? Where's the tool? See a break below on increased volume, and then we're instantly back into this balance. It implies that there's a reversal and we should target upper and higher prices. And finally, a tight range, but tight range build up with an impulse low and a rebid. I'm not going to draw that out because I already drew out the tight ranges. But impulse low / fake breakout. Now let's go ahead and jump on into the examples. So first up, 0503. We see dark shades of red with large aggressive buying coming into the lows. So aggressive selling and aggressive buying. We see aggressive selling, but only 0.21 range. And the next candle, we see a dark shade of blue. With buyers getting aggressive. So you can see aggressive selling, 0.14 range, tight range, aggressive selling. Then see this large buyer step in, aggressive selling with only 0.21 range, 0.19 range. We see how delta is still pretty positive on the session. We then see this aggressive buyer come in, see a little sweep below, see us break out and take back this entire leg down on a total of 9,600 volume, the most amount of volume done on the entire session for the whole day. See a huge positive delta within it. We then see sellers get trapped at the lows and then a continuation higher. So next candle, retest the iceberg and remain bid even after the sellers. You can see we retest the iceberg and we hold it as bid even though sellers are getting and selling aggressively into it. This is an example of sellers showing lack of interest at the lows. See on the way down an increase in volume with an increase in volume. We then see, see on the way down an increase in volume. We then see buyers get aggressive at the lows and the price they get aggressive at remains bid. Look at the lows, 1XO, 6XO, light shades of red, so there's little to no selling at the lows. If sellers have the intention of taking us lower, we should see aggressive orders at the lows from them. Light shades imply lack of interest. So see this come into the open, then see sellers get aggressive, sell. You can see how this is on an increase in volume when we're selling off. We then have this little area of consolidation. but if you look at the lows, after this seller got trapped here, we start to see this consolidation with little to no interest from sellers, only 1XO here. So little to no interest. And then we see a break above it on a dark shade of blue with an increase in volume, 3,775. And then we start to go up higher. Next up is 0525. See an increase in volume with one time framing lower broken. See an area where buyers got aggressive and defended. See an increase in volume on the low put in. Dark shades of blue, and we start to see delta flip. And we break out on increased volume. So on the way down, we didn't see really any aggressive buying. We then start to see a buyer step into the market. Aggressive right here. See sellers try to get extremely aggressive right here. See another dark shade of blue. And then on the next candle, we have no interest in penetrating the previous lows, have this little area of consolidation. We then see buyers start to flip delta, and then on the breakout, see a little breakout right here, we increased, it's on increased volume, almost 4,000, and then we kind of just chop around, but this was, good for about 100 ticks on the reversal. And this is also at -2 standard deviation, so just like an extra bit of confluence. So this is, we see one time framing higher, broken with aggressive selling near the previous day's open, and see how we had a small gap down. Buyers and sellers are fighting at the RTH highs. Buyers fail to hold price bid, and we penetrate the previous candle's low and see a pullback into the two-way trade with sellers holding the offer. So you guys see the market gap down. This is the previous low day. See us increasing. If you look at cumulative delta, we then see this extremely dark shade of red. Sellers sold 2,000 here. Sellers sold 1,360 here. Buyers are still trying to become aggressive, but it's at an important reference area, right? The previous day's close. If buyers had the intention of taking us higher, this price should have held bid and should have gone. And then looking into the lows, see sellers sell aggressively into the low, sell aggressively into the low again, sell aggressively into the low again, 1,322 in the previous day. We then see them break it on increased volume, then see a pullback with the buyers getting absorbed, and then just continuation lower. So this is a two-way trade. So buyers and sellers getting aggressive at an important reference area with failure to hold price as bid, and that's something you'd spot on the DOM. And it was also a touch of a 2 standard deviation, so it's just extra confluence. Next up is the S&P 500. Delta is extremely negative on the day. We see large selling into the lows with overlapping profiles and sellers no longer getting rewarded. Dark aggressive red shades of red but overlapping range with a break above the overlapping profiles. Watch us slowly bidding higher, start to see delta reverse. So delta is extremely negative on the session. We see all these dark shades, but look at the range. 4-point range, 3-point range, 5-point range, 4-point range. So their sellers aren't getting anywhere. We then see at the lows 77XO, 9XO, 427XO, and 18XO. So sellers really aren't getting anywhere. So if these sellers aren't getting anywhere, you kind of have to think there's obviously going to be a reversal. Delta is extremely negative. We then start to see a slow drift up with one time framing higher. And then we start to see delta slowly reverse. Delta is extremely positive in this example, and we start to see tight range with overlapping profiles, see dark shades of blue but little to no range expansion, see sellers step in and become extremely aggressive. We eventually see a break of the overlapping on increased volume and large negative delta. So delta is extremely positive, all these dark shades of blue, but looking at the range is becoming tight and there's little to no range expansion. We see how sellers are selling aggressively into lows, but buyers are failing to even hold, bid, and absorb. We eventually see them break it on increased volume and then large negative delta on the way down. Next up is crude. Large negative delta on the day with sellers no longer getting rewarded. See an increase in volume with little range. Sellers get aggressive, 2x, see pop with an increase in volume. 0.24 range after we have this huge leg down, 0.29, and then see sellers get aggressive 2x right here. And then we see how they're failing to take prices lower. We then see a pop on increase in volume, pull back into the area where sellers got aggressive and where buyers took the initiative, and then we just slowly moved up higher. This is also a little iceberg play with delta by price at -2 standard deviation. And then next up is this example of tight balance range with extreme selling, and we see lack of interest above the previous day's close with an eventual reoffer of the previous low of day. So see a move up on low volume, then see this increase in volume with tight range. You have 0.13, 0.18, 0.15, 0.33, and it's an important reference area. You know, we gap down, we finally close the gap, so it's all about using confluence and, you know, context. Close the gap, now at the previous day's close. You know, this is aggressive selling here. You don't really see anything from buyers, right? You then see them break us and then delta flip from positive to negative. So these were some of the principles and some of the examples of the footprint, some of the things I look for on it to spot reversals. I'll be gathering more examples and sharing them throughout the month. I'll see you guys in the next video.